take it away. I was gonna pop in since I talked about this on Wednesday, Alex. I was gonna ask Jeffrey, what do you got for some pullbacks, Jeffrey? What are your technical levels? I talked about this on Wednesday. I just want to see if we haven't talked, so this isn't like some plant.
Yeah.
What do you think on technicals for the SPX?
Yeah, gosh, the last webinar we did together, what, a month ago?
Yeah.
So um, right now, I'm looking at a retest, big picture. I think we need to retest the breakout. So that's back down around 6150 on S&P right there above me. So that's kind of what I'm looking at. Could we grind it higher? Sure. We did have a little consolidation level that may provide support right down here around 6250. So those are the kind of the two levels I'm looking at if we pull back. Now, the market can stay irrational way longer than any of us can stay solvent. It can keep grinding higher, set new records, beat the record from the 60s, the 70s, the 90s. We can set new all-time records for being above the 20-day moving average. That I think to get that, we got to do 102 days. So
Oof.
Where we at?
We're at 60 something out right now, aren't we?
63 today.
Yeah.
Oh, wow. Okay, so we're
Yep.
only. Yeah, I remember we talked about this. SPY SPX 7000. Did we do another 60 days of this? And that's feasible.
I mean,
I think
I'd be really shocked, dude. Anything's possible, but I'm like, come on, dude. Even a pullback, like, it's funny. Jeffrey said exactly. He said one of the three levels I was looking at. So previous resistance would be one, and then just on some of the moving averages, I'm looking at a 21 period and a 50 period moving average. So one slightly above that resistance, and then one slightly like added or below it. But I think we at least have a. Now it's like a pullback towards like 6,100. I think a little nasty flush gets us down to like 6,000. But to me, the market is very supported at like a 6,000 level right now since we just melted up.
yeah,
that is right where it was.
this my big roadmap line. If we start dropping, we'll probably meet up right at that 6,000 area, right in there, up there. So it's a key support right there. We did grind right there too, coming through it.
Yeah.
For sure. Alex, I do have something to share. That profit panel trade I took on Wednesday with I did it for my newsbreaker service for Tesla.
Yeah, did you get put those shares? I was
Yes,
watching.
I did. I got assigned. I got assigned. So I used it as a lesson today. I am keeping the shares in my account, and I'm going to keep the shares and repair them. So what I've done is, in order to make sure I still protected the downside, I added a collar trade. So I closed out my put today for about $17 credit, and that gave me like a little buffer of like, I think $7 or $8 like net profit. So long story short is I own the shares with a break even around trying to think, 319. That's my like total break even. And I have a covered call at 330, and I've got a put at 280, and I'm going out to the end of August.
You want to pull up your chart and
yeah, of
write
course.
it
I was
off
going
to
to ask you if
people?
you want me to share. It's probably
Yeah,
easier to
go
share.
ahead.
Okay. So I'll do the math right here. Go ahead.
On Wednesday morning, I sold that 287. It's gonna go out for full profit today.
Well, so here's what I also did. If you see my account here, I have a ratio spread. I did a 295 by 290 out to next Friday. That's already up 140 bucks. So technically, I kind of covered my newsbreakers trade if I want to just wash it. But this is going to be a full profit hopefully by next Friday. I'm also willing to take on more shares, and then I put on a collar trade. So right now I have the shares here at 100, and then I have the collar trade out to the end of the month. A 330 call by a 280 put. If we drop, like, here, let's look at the chart real quick on Tesla. If we go down, I mean, I think there's a decent amount of support on Tesla, maybe down into like the 290 is like near-term support, but probably down to like the 275 zone.
Yeah. 270. That's what I've been saying, Alex. 275.
That's what Jeff's saying. I will say we bounced off hard on this 300 line from the
We did.
Yeah.
I mean, technically, I kind of see this on Tesla. If we don't test this level, let me use a black line here. If we don't test this low or this low, I mean, structurally, I kind of see Tesla doing something like this.
Yeah, it's in that squeeze.
Yep. So I mean, and posture wise, I mean, I think if this low can hold, I mean, to me, this is a potential like head and shoulders. If we can get out of this like consolidation and then get back to the neckline, what's exciting about Tesla would be that.
Yeah, exactly. I mean, 500, baby.
Yeah, man. I mean, I think getting to like 490 to $500 would be. I mean, honestly, I will probably be covering calls because I am going to most likely generate the income. But obviously, if I can let half of my shares rip, if I've got 200 shares, I might let 100 that I do income on, and then another 100 that run, and see if I can get back to all-time highs. So I think that the posture of it looks pretty good and pretty promising. But I wanted to share it because we talked about it on Wednesday. It was funny because like I didn't get assigned yesterday. The market dropped, $20 on earnings, but I'm like, I get assigned today on a 0 DT, which I'm like, thanks,
Oh,
broker. Like that's
interesting.
so
Yeah.
annoying. Yeah, they signed me like the day of expiration, so that's kind of lame.
Hey,
But
I had puts sold on CMG out to next Friday. I got put today.
did you really?
Yeah,
Dang.
Were you in the money on those puts?
yeah, a little bit.
Okay. It's funny how that, I mean, I did a whole lesson this morning on, what if we get assigned? The reality is if you're trading American options, you have about a 7% chance of assignment. Even if prices through your put, even if prices, below your sell put level, there's about a 7% chance you get assigned early. But it does happen. And I just think traders need to understand, like, if you're selling puts, like Jeffrey just said on Chipotle, you could get assigned. And if it happens, like, know that there's like a plan B. So what are you doing on those puts, Jeffrey? Are you keeping them? Are you going to repair them at all? What are you doing?
Well, so right now, I'm actually bullish on CMG for the big term,
Okay.
and I'm just gonna.
Yeah.
I was kind of intending to get put. It just happened earlier than I thought, and
Yeah, I think I have some shares on this.
yeah, I got Chewy early too, so that's kind
Oh
of
boy.
interesting.
I actually, so the shares that I did have, let me check my tracker here. So CMG, I know I took some ratio spreads in this one or naked puts. I did a ratio spread that was profitable. Earnings, took profit on earnings. Naked put combos. Yeah, I got like $3 credit, willing to own. It never got assigned. That was like last fall. So this push to the downside. Let's do some fundamentals here. And then Alex, you want to take the screen over anytime? Just let me know. I'm just going to do some
Go ahead.
Yeah,
I'm
digging
following
around.
along on my screen.
yeah, I mean, I'm long-term bullish, so I'm just gonna
Yeah.
sit on them and sell calls when I get the opportunity above my cost basis at 49.
Okay.
Yeah. I mean,
So we got current
who else
price.
can give such a tasty burrito? Hogue?
Well,
I've
Hogue?
never eaten there. I've never
Hogue?
eaten there.
oh my
Really?
gosh, what?
Dude, you got to eat Chipotle, man. What are you, a
There's
Moe's
not
guy?
one convenient to me, so
They
like I've
were
never
one.
eaten there.
I was say I'm going to give them credit for the ghost kitchen because that was kind of the big thing during COVID is like just come pick up your food and they put it outside. They put it in the bag outside. Chipotle's totally fine, man. And I mean, I'm just glad that they split because this was like, why is this a fast food company that's like $1,000 plus stock?
Man,
So anyway, I want to check something here. So we had April lows at 44. Um, I mean, I think Chipotle is pretty resilient. We also have like this 5-period yearly moving average, which I like to use as well for the bigger picture.
you said 44, right?
The April low is around $44. Yeah.
Yeah, I was looking at that. We got a double bounce off that in April, but you go back even farther to January 24. It was right around there as
Yep.
well.
Yeah, yeah, exactly. So, all right, guess what that means, Alex? Guess what trade I'm gonna look at?
Uh-oh.
Yeah, I've said it like 10
There's
times on this
there's
prop
so
panel.
many you do. You throw out like
Yeah.
seven different
Yeah,
types of
yeah.
options trades and I can never guess, man.
All right. Well, I'll keep you guessing, but it's going to be an oldie but a goodie. It's going to be a ratio spread.
Oh, okay.
All
Hey,
right.
I was
I thought
thinking,
you knew that one.
I was thinking that, but I was too shy to say it.
All right. I'm going to go either December, January. I think I could do this 42 by 40. Only getting 50 cents though. That's not great. I think I'm going to do a naked put combo here, Jeffrey. If I go 40, maybe 42.50, maybe own some shares in here. I get $359 of income. I'm willing to own up to 300 shares at prices below 37.50. My break even on this trade. So if I did 3 puts, 42.50 plus 40 plus 37.50. So I'd own the shares break
40.
even at 40, right? I can then start adding covered calls and use it as income on the 300 shares. So in order for me to get assigned, price has to drop below all 3 levels. If I get assigned on 1, okay, fine. I'll calculate my break even if I just have 100 shares. But basically, that's going to be my average price. I pull in 359. So then I take 3. Let me see. I like this trade enough. How much is that going to set me back? Like $40 average, about 12,000 cash. I could do it there, 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 there. So I think that's 9 accounts I could do that on. Let me see if I can get filled here for 360. And that way it's a $360 income trade. Probability of profit is about 78%. Chance of assignment is possibly about 70%-ish. But that's also after a big gap. Volatility probably spiked a little bit, even though the IV rank is still quite low. I just think there's a lot of support. Alex, you mentioned it, $44. 40 is a round number. That's kind of my break-even point. That gives me a little bit of a buffer. The ratio spread doesn't give me enough credit, so I'm going to do up to 300 shares. Let's see if I can get fill. I'd say 355 to 360. I'd be happy with for a fill. So let's try.
You're doing like 3 tiered puts basically.
Yep, I'm just gonna stack puts. So 42.50 sell put, $40 sell put, and 47.50. Now I could just sell 3 puts at 40, but I'm gonna make less profit. So that 42.50 is a little bit of sweetener for me. That makes sense.
Yeah, I was sitting there doing the math on that. I was like, yeah, that's interesting the way you just stacked that up, and it actually comes out slightly more profit than if you just did 340s.
Yeah, I'll make like an extra maybe like 30, 40 bucks on the trade if it's an income trade. So let me see if I can get filled at 360 is not filling. I'll penny this down to the mid. I mean, I don't want to get filled with the bid price. I try to get a little bit more out of that if I can. Bid price is 353. I'd be happy with 355. I'm gonna penny this down to see if I get filled. Hopefully 355 will fill. 57 not filling. 56 not filling.
Well, you're pretty aggressive on that. I usually count the 5.
I got filled at 356. 356.
There you go.
Okay. So I'm gonna take this trade and get this in for the other accounts. So while I'm doing this, guys, feel free to chat some more about Chipotle. I'm going to get these trades in 356.
That actually puts your actual true cost at like 36.60 roughly.
I'll do the math. No. It'll be slightly higher because the way I stack it, I got to do a slightly different break even.
Yeah, can you drop that in the chat too for everybody?
I will. Yep. Let me get these. So I got to fill up another like 5 or 6 accounts here. So let me do that first. And I'll drop it in the chat. So
your cost is 40, but then your credit off of that. So I was just pulling on down.
But 40. But remember, because I'm doing 300 shares and they're staggered, I technically only move the cost basis like $1.20 or dollar. Does it make sense? Because if I do a $40 break even, I can't take 356 out of that. I've got to do like the 42.50. minus the credit. I've got to do the $40 minus the credit, the 37.50 minus the credit. So the way the math works is I just divide it by 3. So my 40 break even, I know this is getting stupid complicated here. But here's what it really is. If I do $40, I got filled for 356. Okay, but I'm going to take 300 shares. So if I divide that by 3,
average across it, yeah.
That's my average credit across the board is $1.18. So now I can take the $1.18 minus the net, the break even at 40. My net break even on all shares, if I'm assigned on all 300 shares, is $38.80.
Wow, that is significantly below.
So it's way below the 40. It's way below the 44 that we have as pretty good support. So realistically, I don't anticipate taking a lot of risk on this trade. I don't really want the shares, but if I take the shares, I know my break even is going to be $38.81, and I'll add a $39 or $40 covered call and see if I can flip it for a couple of bucks. I mean. The nice part is I can
back to 2023 levels there.
Yeah. I mean, I don't know about you guys, but love or hate Chipotle, it's like there's a lot of competitors. But I mean, Chipotle is still legit. I've been in a pinch. It's like Qdoba, Chipotle out here in Utah. There's a Costa Vida. There's a Cafe Rio. They've all copied the same thing. There's a Pancheros. They're all the same thing.
Yeah.
You know.
I mean, out of all the fast food, if I have to eat any, I'll do Chipotle.
There you go. This is clearly a plug for Chipotle in this.
Yeah. So go to chipotle.com and
just go ahead and order and send it directly to Alex.
Panel. You can get we'll get the affiliate money there.
Yeah, we got a promo code there for 10% free chips and queso.
Yeah.
At Chipotle. All right, guys. Alex, you want to grab the screen here? Let me get these trades up and I'll post it in Zoom. I'll stop the share real quickly, and then I'm going to make sure I get all my accounts filled here.
Yeah, for sure.
Okay, thank you.
So folks, here's the disclaimer. We do this every day, but just, this is all a personal opinion. You got to do, your own research, and, there's always going to be risk involved in the markets. Obviously, it's not a free ride. So just make sure you are aware of that and do your own research. So just looking over reviewing the week, right? Healthcare led, the markets. And I was trying to dig down. Actually, didn't have time to dig down. You got any healthcare stocks on the radar, Jeffrey, that you're following? I mean, we did have on the 22nd, so 3 days ago, UNHG launched. Yeah, I know you like those lever tickers.
Yeah, I'm still looking for downside on UNH though. I still feel like it has a little bit more to go to support. Let's see, pull it up and talk to you about it. Talk to you intelligibly. Yeah, I'm looking for a 225 support on that one, which is Another
Don't
leg
say,
down.
don't say that.
Yeah.
I think I've got a 260. I got a 265 by 260 ratio spread on UNH.
Yeah, I was looking for it to dip into those pre-COVID lows.
Oh, dude, don't do that to me.
Yeah,
Wow,
All right.
that's all the way down at 192 or so.
Yeah, I've got a 270 by 260 ratio spread. I pulled in $6 credit. I still think either way I'm going to get it repaired, but I am surprised. I mean, why is healthcare like Johnson & Johnson had a good pop this year, so I had some naked puts on Johnson & Johnson did well. Pfizer is just a glowing turd of a stock. I don't know why it can't catch any bid. Obviously, it's off the
dude.
lows by about 20 some percent, but
The option skew on Pfizer right now is ridiculous. Like
Let's look at
80% of the options are calls that are
I
on
know
Pfizer right now.
because it's just permanently suppressed, man. It's like they're just because it's a dividend stock, it's a low beta stock, and I just feel like people are just selling just tons of calls to just keep it capped.
yeah.
I'd love for that thing to just try to find a little relief up until like $29 or $30. But I'm just kind of waiting it out. I mean, we're sitting on the daily chart at the 200 moving average. If we get above, we clear like the 26 hurdle, maybe that opens it up a little bit towards like the high 20s or maybe $30 again. I mean,
And,
fundamentally, it's still a strong stock. I mean, I just wish they would make more Ozempic and stop making freaking COVID vaccines,
Yeah.
or more
yeah,
Viagra or something. I mean, get their greatest hits out again. Just make some. I don't understand why their stock is so beat up, but
they
I mean, if
got
they're
huge
facing
huge
tariffs,
supply there at the 26 and then at 30, like you said, like
yeah,
big supply zones.
yep.
Yeah. Yeah, we got earnings coming up. They're bouncing down against this resistance line here. It'll be interesting.
Have you guys been following Cardinal Health? That's been one of the shiny. I mean, it was just like one of the big rippers this year, Cardinal Health, and there was a couple other ones, but that type of, you don't see a lot of healthcare stocks that look like that. And that was like
Yeah.
Cardinal Health is incorporating a lot more AI. That's kind of what the big hype was. And
What do
I
they
mean,
do?
I don't even know, dude. I just know that this is like in the healthcare
AI.
space and they're doing AI. Yeah, that was like the big benefit of them this year.
Yeah.
Yeah,
So
Cardinal,
go ahead.
they run some hospitals, I believe. Let's see.
Yeah. Operator.
Yeah, surgery centers, hospitals. Yeah.
Yep.
Yeah, they're an operator. So
I mean,
Well,
a pullback could be great, but just
look at
to
those
what degree?
earnings. Look at those earnings. I mean, they're undefeated back since 2022.
That's pretty impressive. Yeah.
Yeah. Wow.
So
Yeah.
as far as like, getting into a healthcare play that looks a lot better than like, hey, where's the bottom on UNH or why isn't Pfizer turning up? It's like, well, this thing's probably up year to date. I don't even know what year to date it is, but it's probably up, triple.
yeah,
It's probably up 40, 50, 60%, I would think. Where's
Well,
yeah,
one.
Humana's already at COVID lows. So I mean, health
Oof.
health insurance is rough right now.
I mean, it
Yeah.
should be. And yet it's not low for us. Like the
Well,
consumer's paying an arm and a leg for health insurance, but the stocks are all crap. That's fun.
yeah, well, they have to charge us more so they can, recoup the
Yeah.
share they're losing.
So at one point, Cardinal Health was up around 40% year to date. It's still up around 30%. So it's up there with some of the. And I mean, even the dip we had in April, that thing was like super resilient. I mean, it started off high. It was pushing higher for the year. Even took that April dip really, really well, and just ripped up the highs again. So pretty reflexive stock. And I mean, correlation. What's the beta on this thing? Beta is 0.5. Wow.
Hmm.
So not super volatile, I guess, but just a big bullish channel.
I mean, yeah, well, that makes sense because it's kind of just followed like the Nvidias and the AVGOs so far. It's just gone up. This look at that.
Yeah, it looks like in health technology, Gilead's kind of leading the pack along with ID IDX Laboratories,
Dicks. Can we say that?
IDXX.
All right. I'm typing up in my spreadsheet. I'll post that Chipotle stuff in Zoom here in about 2 minutes. Willing to own shares. So 40 would be the break even minus the $1.18. So that'll be 38.
How do you do that heat map on TradingView? Is that just you have to just I've never seen that one.
On the products, it's you go to the heat maps
Okay.
on the products page.
I've just been typing in FinViz and stuff.
Yeah, I keep a tab up with the heat maps along with my regular chart. So
Yeah.
just helps poke around. You can set it to year to date and just kind of look up, what's performing, what's sucking.
Yeah, no,
Yeah.
that's like I try and do that every week to see what could be brewing under
Yeah,
the
usually at the half point of the year, I kind of look at what's sucking so far this year. Usually it's going to keep sucking the second half of the year. What's
Yep.
performing? Usually it keeps performing. May not like keeps performing banger, but it's going to keep performing for the rest of the year.
right.
And that's just kind of so I use that. Definitely like to look at it halfway. So we're still in July, which is pretty close to halfway. So
Yeah.
UNH down 44% this year. Probably gonna keep being kind of sucky. Sorry, Chris.
Well, yeah, I mean, if it is, the premiums will be decent. I mean, the assignment price for me, the nice thing is a 270 by 260. I pulled in $6, so I get assigned at 260. If it goes below that, minus 10, minus 6. I own the shares at 244. So you'd mentioned 225.
Yeah, that's not. I mean, that's not horrible. You probably
So I
still get
think I
premium
can
down
I
there.
can repair that. Yeah, I think I can
Yeah.
repair that pretty easily, and price would have to drop below 260 to take that assignment. So, you never know. It was like end of the year. I do wonder how this market's going to take a September everything. I mean, this is a good question for both you guys. This whole idea of, okay, so next week is the Fed. We'll have a Powell press conference. This guy's been under a ridiculous amount of pressure of is he gonna bow to Trump to cut rates in July? Is there going to be dissenting opinion in the Fed this month for pressuring the Fed to cut rates, or does the Fed cut rates in September? And are we again cutting on the short end of the curve, not the long end of the curve? And does the market all of a sudden realize that, oh my gosh, the Fed's starting to cut rates, but the long end of the curve continues to go higher? Does something like that get priced in where it's like the market just takes a huge nosedive, or it's just we're still resilient, the labor market's fine? We're not really seeing yields go higher, or the rate of change isn't going higher. But I'm just wondering, like September, December rate cuts, is this going to be the sell, like buy the rumor, sell the news, where like the market realizes, hey, the long end of the curve isn't changing, and that's a bad thing, and the market prices it in? Or resiliency in earnings, a pro-growth administration right now. A shadow Fed would clearly be like a bad idea. You don't want to turn like Jerome Powell into a lame duck if there's like replacements already lined up. But again, I think like Trump and company probably know that they tested the market last week on Wednesday to drip that like, hey, if we fired Powell, the market's down 0.7%. So it's like it's probably not a good idea to put in a shadow Fed. Question the credibility and the independence of the Fed. So just let the guy serve out his term. He's likely going to cut rates with full transparency. We've got September, December rate cuts already planned, and then more coming in 2026. So his term is up, I think, in May of next year. And I know there's pressure to like make him resign. I'm like, why? It just seems so disruptive. Just the Fed, the market just kind of stays where it is. There's no problems. I just wonder if you think like the buy the rumor, sell the news September, if we officially have rate cuts and it doesn't change the long end of the curve, if the market's going to have a bad reaction to it. Thoughts?
Well, first off, I guess we should look at
That's what I should be watching, right?
the
The
betting
betting
markets
markets.
here. Yeah.
Is this
So
for the September one? I was going to say that's July. That's a pretty high. Okay.
yeah, September. I don't think
Okay.
anything's I mean, do we really think anything's going to happen in July?
No, I think it would just be the dissent. You'd have like a couple Fed officials. I don't know if there's a dot plot in
We
July.
already
There might be.
we had that, right? Wasn't who was it? Waller? Waller
Well,
seemed like
what he had said he's going to dissent, but it's like, okay, so you
yeah.
dissent, but I don't know if there's a dot plot in July.
Yeah,
Um,
I haven't seen it. If there is, I mean, but for the September, we're basically 50-50. I mean, 50, or I guess, well, I don't know if that's actually 50-50. It's
it's a slight,
50%,
it's a little bit higher. I think
okay,
let me check the Fed Watch tool right now.
49% chance of a 25 basis point decrease.
Oh, you're talking like poly market 50-50. I'm looking at the Fed Watch
Yeah,
tool. The futures market has a 64.2% chance we cut rates.
interesting.
Yep. And that usually is
Is that more
pretty
accurate
accurate.
than the hive mind?
Yeah. Yeah.
Well, I mean, actually, that's right on. If you add the 25 and the 50 together, you're pretty
Yeah,
darn close to what Chris just said
Yeah.
right there.
yeah.
So and the Fed Watch tool has changed. Like we at one point showed up to 3 rate cuts this year, and then it dipped back to 2. It's only shown 1 this year as well. Like it's been back and forth quite a bit, but we've kind of settled in on next week is going to be a pause. 97.4% chance on the Fed Watch tool. Nothing happens next week. September, 64.2. So let's talk about potential surprises. If the Fed cuts 50 basis points, I think that's a surprise, right? That's like we should have cut in July. We're going to cut 50 basis points like we did last year. And I don't think the market's going to respond very favorably to that. Last year,
Well, no, it's like, wait, what's happening?
yeah,
Why are
Except
you
they
so
can't
late?
cut. The problem is they can't cut. If they cut, they're going to be below the market rate. If they cut 0.5, even if they cut a quarter, they're going to be at the market rate. And that's the 2-year constant treasury rate that I've got up on the screen right there. They've had no room to cut. That's the
right,
problem.
yeah,
They don't want to cut and then have to raise it immediately the next meeting or do an emergency rate raise, because if they cut and then people stop buying treasuries and the treasury rate goes higher, they got to raise again. And
yep.
the treasury sets the rate, not the Fed.
True. And I think Bank of America came out last week and said they don't anticipate the Fed cutting rates at all this year. And I mean, not that they're
Yeah.
right. It's just, but it's at least a narrative of maybe they don't cut it all this year. And
I,
I do wonder how vocal Trump will get if they don't cut it all this year. I feel like, but again, it's like I think the bond market's ultimately going to kind of say like where things have to go. It's like we can beg and plead and we control Jerome Powell and say cut rates, cut rate, cuts rate. But if we're only cutting the short end of the curve, not the long end, if the 10-year yield doesn't budge and 10, 20, 30 years just kind of stay stable or drift higher, none of that's going to help the big picture. Our housing market's not going to be any better.
yeah.
Houses are still at crazy unaffordable prices at like 6 times salary right now. I mean, again, like there's a lot of things stacked up on the wall of worry that we've continued to climb. So
See, Trump's been sucked into the narrative that the Fed rate drives everything, but it's not true.
of course it's
Is
not
what we're
true.
sitting here like. What we're sitting here saying is it's not actually the truth of it, but that's what everybody believes, that the Fed controls these interest rates.
Because what's the simplest thing to tell people? The Fed controls it. Look, it's his
Yeah,
fault. Like
Now,
that's the
what would
easiest thing to
happen
say.
though? What would happen if they did what Trump was actually saying in like 1% interest rates? That would have some effect on the short
Oh
end,
my
right?
God, dude.
I think it's going to wreck everything, and like we're actually going to see interest rates
Absolute.
spike.
Oh,
You
dude,
know?
if we cut like 200 basis points in the next 2 years, I feel like we're either going to like bubblegeddon or we're gonna freaking break something. Like that's so irresponsible if we did something like that. The whole
I'm
look,
ready for
the Fed
Bubblegeddon.
is
I'm
about
ready for
price stability,
Bubblegeddon.
man. The Fed is about
Let's
price
just run
stability.
this thing until we can. Let's just run this thing as far long as we can, man.
And yeah, until it breaks. It's like I hope that's not the plan. Like we're better than that. It's like I think the world needs us to be more stable and not silly.
Now, the flip side of this whole thing, though, is Trump sits here and realizes that we have like $30 trillion in real estate uh, loans, commercial real estate loans that are sitting there needing to refinance.
Yep.
Banks have been punting these down the road, not wanting to foreclose because the market's absolute crap. And Trump's sitting there like he's a real estate guy. That's where he made his money. He's sitting there looking at it. He's like, these real estate rates need to come down, and he's believing that the Fed sets the rates. He's fallen into the trap,
I
and
mean,
he
he
thinks
is the
that it's going to
president of the
fix the
United
problem.
he's the president of the United States. You'd think that there's got to be some minds that would be like, Mr. President, this is actually how it works.
you would
I mean,
you would
seriously,
think and
it's
hope
like
so.
because otherwise, it's like what we're seeing is a very vocal president on something that really Jerome Powell or the Fed isn't controlling. Because the
Right.
reality is, if the Fed makes a misstep, the market's going to catch it. Like the bond market's going to catch it, and then the aftermath is something is worse. This
Yeah.
year, I think the biggest disruption to the markets would be a break in the dollar or break in the bond market. And we had a flinch in April. If we have another flinch or another kind of breaking point, that's not going to be good because we're talking about this plan to grow our way out of everything right now at $37 trillion, trying to grow our way out of things. But you can't grow at 4.5%, 5% 10-year yields. You can't grow when everything is up. I mean, from COVID levels, we're talking interest rates that are double or triple on
Yeah.
houses.
Yeah.
In
Yeah.
commercial real estate, it's even higher. I mean, the points. I mean, doing the hedge fund I was with, we had real estate, and we were getting perm financing between like 8.5% and 10% on some of our rental units. It's brutal, and it's like, and that's not improving for these last couple of years. I mean, the hard part is like you have 3 or 4 years of like holding and waiting, and kind of doubling down and like waiting for rates to get better. And if all of a sudden they don't, I just wonder like, does it break the business of real estate? Does it break the housing prices a little bit? Do prices
Yeah.
have to come down 20, 30% in order to stabilize the markets? I mean, if you play with even the wealthiest people's home prices, or anybody's home price for that matter. But if you play with the wealthiest people's
You're out.
portfolios and the wealthiest people's real estate portfolio, they're
Yeah.
going to feel the pinch. And so, like, everyone talks about market broadening, right? Remember, the markets can broaden by everything goes up together, and that's a broadening out, like a healthy bull market. But also broadening is like the top performers just come down and ride out with the bottoms. And so things go like the worst performers go down less while the top performers go down more. That's a broadening out. The real estate market could do the same thing. You could have like
Well,
the wealthiest people get hurt badly enough where it's like, well, everyone that's been struggling just continues to struggle, but the high flying portfolios come down, 20, 30%, and everyone's pissed. So I don't know. I don't think we're there yet. I don't think we're there yet. Like I think that
well,
this
see,
melt up
it's
is like potentially going to be like the midterms of 2026 when it really gets nasty to see what people think. That's
so
what I
there's
think.
there's a brewing, the great financial crisis greatly blamed on residential mortgages getting out of whack. Well,
Yeah.
right now we have over a third of US banks, and we have about 5,000 US banks. Over a third of those are holding more than 300% of their net equity value of commercial real estate on their balance sheet right now. So they're 300% underwater, needing to refinance. And
Yeah.
I don't think Trump's like oblivious to this fact. And potentially, I think potentially he's just jawboning, trying to get the rates to jawbone down, and it's
Yeah.
not working.
Well, so
And
what actually gets rates down then? What do you think, Jeffrey? What would get rates down? Like in a
Long end of the
sustainable
curve, man. Long
manner.
end of the curve has to come down. Like
you have,
deflationary pressures have to push yields down.
yeah, we
And
got to
that's
have
not
yields
good.
coming down, and that
Yeah.
we got to have the treasuries coming down, and we've got to have that risk off money coming down.
Yep.
And for that to happen, you have to have people wanting to put money into US dollars, in treasuries. And we've kind of wrecked that right now. And I don't know like what the real solution is. It may be a big correction. It may be a price correction.
Yeah.
Great. We
So
could
you
call it the
think
Great Reset. We could call it a Greater Depression. We could call it all sorts of things. But I think this is the giant risk right now that nobody's really talking about.
So you think if
And
we were to have a massive sell-off, it makes the growth prospects of America. I mean, it's interesting. You have a massive sell-off, all of a sudden, it makes the growth prospects of America much better, actually, because you can recover your way out of it. And you're buying at a lower level. Right now, it's like it's overpriced. America's overpriced.
Yeah.
yeah, we are. I
And we
heard
haven't
this.
seen the big tech companies that don't make money do anything since the 2022 pullback. They've been sitting in a depression, and they're just now coming up off the lows
Like
right
what do
now
you
in this
which one are you
mania.
talking about?
I don't have a
Any
I don't
idea?
have a chart for it. It's like it's a basket of stocks that they track that it's big tech that doesn't make money. It's the
So like all but
the
the top
Nasdaq
10.
100s that the Nasdaq 100s that don't actually produce any
Yeah. So it's like 90
meaningful
stocks.
earnings. Yeah.
Yeah.
It's
So
like that.
they're actually been sitting at lows and haven't really budged at all. It's basically the everything except the Mag 7.
Yeah. It's
Wow.
crazy.
Wow. Yeah,
I did hear an interesting point yesterday. This thought of this genius bill and the stable coins coming out with major banks playing in the stablecoin space. That is a way to still force everything to be backed by U.S. Treasuries. And I don't
Yeah.
know if that's like a like kind of a backdoor way to like get more flows into Treasury to stabilize the bond
that
market.
that was my whole theory on I talked about it here on Profit Panel, didn't I, Alex? How
Yeah.
I thought that these stable coins and the way that they just basically force them to have to buy treasuries, and that's the only investment they can do to actually produce real income.
This is a
Um,
giant
it,
Ponzi scheme,
it
basically.
created a buyer for treasuries, and
Right.
and at the same time, it expands the money supply in U.S. dollars without the Fed having to print money.
It's beautiful if it works.
Yeah.
It's an interesting.
There's got to be a risk in there somewhere, Jeffrey, right?
Oh,
Like they can't just be foolproof.
It's all a risk. I mean,
Yeah.
the whole thing could come apart.
Yeah.
This is just I think they put that like they smart people or maybe dumb people were sitting there going, "Hey, I know what we can do."
Right. Yeah,
Yeah.
it's so dumb, it's smart. It's one of those circular things. I mean, so again, but like talking about kind of the commercial real estate loans, we also should think about all the like just the national debt that needs to be refinanced, and what happens with that, and that's coming up, I think, starting in September into early 2026 as well. So and that starts rolling over, and that has to be that's what Trump, if you go on X or True Social, that's what he keeps on saying. It's like we have all this debt that needs to be refinanced, and you got to lower rates for that to happen. And if it doesn't happen, I don't know what you do. It could be. I mean, so September I think is when it starts. So again, melting up until till the end of this quarter here, and then see what happens once people come back, once the summer ends.
Yeah, that national debt number is not coming down.
No.
No, it's definitely not.
In DC, they have all these bus stops. They have that they have like a little, electronic billboard with it on some of the bus stops. It's pretty wild. Yeah.
37.1 trillion. I mean,
Yeah, I don't, Z someone was asking about debt, good versus bad debt. Yeah. Z. I guess some debt is good. I don't know.
the government spending money does not generate any, there's no goods produced.
GDP is a false misnomer of growth, because government spending is not growth, and it's factored into GDP. So when you see the GDP numbers, right, they don't mean that like there's a thriving growth happening, and they don't necessarily mean there's thriving growth happening in the economy.
If you take out government spending from the GDP number, we've actually been in a depression since 2022.
Wow, that's crazy.
Yeah, so we've only had growth because of government spending. And if you take government spending out of the GDP, we've been negative GDP since 2022. It's bad.
That was the big surprise through 2022's recovery, is once we got out of that dip in Q4 2022 and ripped so hard in 2023, it was really just showing like, hey, government spending, fiscal policy is lifting this tide. And that was like the big K-shaped recovery that, Biden got so much flack for after the fact. But if you were an investor, I mean, Biden's administration was great for asset holders. It was terrible for everybody else. But that was the K-shaped recovery post-COVID, and fiscal policy was like, holy crap, this is way more important right now than monetary policy. And here we are, like, we still have more fiscal policy happening right now. And then we also have Fed that's going to be potentially cutting rates, say they're going to cut rates. But I think the bigger shock is that they don't. If they don't cut rates, it's not a good thing. If they cut rates and then raise rates, it looks like they have no idea what they're doing. So it's hard, man. It's like, I think the US market in a way is, I mean, look, we can sit here and like, say how bad things are going to get. Everyone is tied to the US. Like the saying is, if the US catches a cold, the world catches the flu. I mean, if something bad happens to us, like we saw back in April, our decline in the markets crushed everything else too. Like, it's systemic. If the US is struggling, we're taking the whole world with us. China's going to be down. Europe's going to be down. There's nothing good that comes from the US struggling. So
if you're short US treasury, if you're short US equities, you have if you're long term, like you think it's going to be like you don't need to worry about investing, and that's the last thing you need to worry about. You need to be getting like antibiotics and pills, right? That's how important the US is, right? So if you're like a doomer, you're a perma bear, you're just like, oh, catastrophist. Again, there's a lot of people. Think about how many people's lives are tied up in the markets, right? I mean, it's just, now stuff can happen, but when you think about the trillions, tens of trillions of dollars, maybe more than that are tied up in US equities and US markets. I mean, man, if that unravels, there's such big problems around the whole world. So I would just be cautious of being too
a global company's worth $126 trillion.
Yeah. What are you looking at there, by market cap? How do I get to
eight market cap?
Wow,
it's infinite market cap. It's companies up there 126 trillion, ETFs 13 trillion, currencies 3.7 trillion, gold 22 trillion.
Yeah. Okay. So folks, like if you're sitting here and you're saying, oh, this is all this debt, we're going down, we're gonna drop, and it's going to be a catastrophe. I mean, maybe it could be. I don't know. I mean, everything could happen, but it's just, there's a lot of very rich, very smart people making sure this perpetual money machine keeps going. And sometimes it breaks temporarily, but it hasn't broken forever, right? So just think about that, everybody watching at home.
Hey, since the beginning of people, we've always recovered.
Yeah.
Just a matter of how long it takes.
Yeah. Wanted to get into some earnings though. I know, Chris, you do trade earnings. Jeffrey, are you active on the earnings side at all?
I take pot shots. Like, I have to be really, really convinced.
Yeah. I don't know what you've noticed, either of you, but I do think this has been kind of a more tumultuous earnings. I've noticed that some of the tickers have been either dropping or rising more than historically they have, and they've actually been beating the implied volatility on that prior to the options move. So it's been a pretty wild ride so far this earnings season. We got a big week coming up next week. I mean, obviously Tesla underperformed yesterday. We're talking about that. There's a strong bounce. What's interesting though is like ASML, which is the chip fab company from the Netherlands. I think they're in the Netherlands, Dutch, and Intel today showing some cracks
Yeah.
in demand, which is interesting. Obviously, Nvidia is the predominant power there, but maybe we got Nvidia coming up at the end of this
Well,
season.
NVIDIA doesn't make doesn't make fabs, so they make designs, but they don't actually manufacture their own anything.
But
They
that, but
rely
if
on.
but if the manufacturers aren't seeing the demand, wouldn't that cycle
It-
through?
It's kind of interesting though. There, it's like maybe those manufacturers screwed themselves with contracts trying to get that NVIDIA contract. So it's a very complicated thing when you look at it. It's like, yeah, the fabs may be competing for the contracts and they've competed themselves into the dirt, um, to the point where they're not making any money. And I don't know who has the big NVIDIA contract right now, actually, off the top of my
Uh,
head.
well, so that's the thing with ASML here is I don't. They're the only one who really does it. I don't think there is like there's other fab companies, but the type of
Well, ASML makes the fabs. They don't actually make the chips. They sell the equipment to everybody, but they
okay,
don't actually make the chips. They don't run the
lithography
fabs.
machines. Yeah,
Yeah,
okay.
they make the lithography machines to sell them to chip fabricators like Intel and Taiwan Semi and Texas Instruments and on and on and on.
I mean, it's
And
not looking good technically on there. I mean, they broke through that. Looked like they broke down below this little trend line here. I don't know. They
yeah,
had
I've got support down to the bottom of the gap there. I'll have to pull the chart back up. I had the earnings pulled up there. Let's see, ASML. Go back to the right screen. And my support zone was down to 695. That was the high off the April low, the initial high.
oh, awesome. Are you in this?
No, I'm just waiting for it to bounce. I actually drew a. You see my screen there. I drew a we came up just a little higher than I thought, then we came right down where I thought. We're
Yeah.
consolidating just above that 695 support. Um, if I had bigger accounts and bigger resources, I might consider selling puts in that 695 area, but it's a
Yeah, that
little rich
pretty
for me right now.
yeah, that puts you back a pretty penny if you did get assigned those shares.
Do you guys like anything between SMH and SOXX as far as like playing the semiconductor space? I mean, Jeffrey, you seem to have a good pulse on like all ETFs and whatnot. Do you like those at all as far as like the infrastructure side of this AI build out, or just play the chips and tech?
That is one ferocious move up off the lows with no pullbacks,
Yeah.
except for right at the beginning.
Yep.
It's kind of like looking at the S&P chart. We need some sort of pullback before I would get involved in
Of
SMH right
course.
there.
Yeah. But if
Wait,
you
what's the
but
other one?
compare like SMH and SOXX, I mean,
Stocks.
yeah, so SOXX hasn't reached the all-time high yet, but kind of the same thing. It's like a very aggressive V bottom. We could pull back and kind of base in around like the 220 zone ish, maybe 210 to 220. I wouldn't mind taking like a stab in there, but yeah, I'm just curious, like, research wise, is it better for SMH? I mean, I think the option flows and premiums are better in SMH than they are SOXX, but they're
So you
also
think
very different offerings.
you think you would want to wait for it to drop below like even 229, which is where the recent rip started? You
Yeah,
you
if I'm positioned for it to be like somehow like puts that I'd be happy with a credit or ratio spread where it becomes an income trade, and if I get the assignment, so be it. But I'm not going to buy like a high flower V bottom like that. I'm going to wait for like the pullback or position for the assignment to be the price that I'm happy with.
yeah.
Yeah,
Yeah.
for me, the two I'd be watching SMH or SOXX for the pullback, and then probably considering buying USD, which is Ultra Semiconductors, or SOXL, which is a 3x leverage on semiconductors, if I was going to take
Yeah,
advantage of it.
I got you. Take advantage of what the dip, like to buy the dip.
Yeah,
Yeah,
if it dips, and I think it's going higher right now, I look at AMD's chart, it's straight up off the lows. I look at Nvidia's chart, straight up off the lows.
yeah,
Everything just needs a a reset a little bit.
I know.
Look at
I
that.
think August is probably the perfect timing for it. I'm not saying it's going to be April 1st or August 1st with a deadline, but I mean next week. Think about this, man. We've got the Fed on Wednesday.
FOMC.
We have FOMC on Wednesday, Mag 7 earnings with Apple, Amazon, Microsoft, Meta, and we have the August 1st deadline and non-farm payroll. We have all these things hitting next week. Also, it's the end of the month.
That
Like,
is a
and
stacked
that
week.
perfect window of like, my gosh, if we hold current levels next week, it's like that'd be amazing. But I feel like as we get into August, something data wise, like last year, for example, that August 5th, it was the August 2nd non-farm payroll to August 5th, Monday morning. The market took a huge dump over the weekend. That was when the JPY was deleveraging, but it was also the SOM rule got activated. The labor market all of a sudden showed like, oh man, labor's not that great. Well, we kind of know that labor's not that great. A lot of the revisions in non-farm payroll have showed we're making like very little job gains. And what job gains we have has been service or government. That's pretty much it. You know, like tech isn't hiring. Tech hasn't been hiring since 2022. And tech's going to
They've been
continue to
laying off
not
people with
hire.
the AI.
Yeah, exactly. Like it's going to continue to not hire, i.e. also cut. I mean, Microsoft just cut like 4% of its global workforce. It was like, 9 or 10,000 workers. And they've been cutting like pretty steadily since like 2022. So anyway, but it's just a big week next week.
Just based on this ultra chart right here for USD, it could easily dip through September.
Meaning like it can like once it turns over, it can kind of fall through like August, September.
And we can just downtrend all the way through
Yeah.
August into September.
Yeah, which is what 2023 was. 2023 was essentially a bull market, like coming out of the 2022 Q4 lows, but it was a bull market going into July or September of 2023, and we had about a 10% correction, and then we Q4'd our way out of it. So
Man,
it could be very similar to that.
great.
Yeah, like high, low, lower, high, lower, low. It catches. I mean, I do think that a dip we see, like, I like the 6,000 level on SPX. I think we can pull back to there, possibly lower. And I think the scary part is like if we have like a fast move down to 6,000, a dead cat bounce, and then another flush lower, that's when people start to get nervous. It's like, wait, the dip didn't make all-time highs again. The dip didn't get bought and go right to all-time highs. It's like traders get all of a sudden nervous when it's like we have a second leg lower or like another wave lower. But I still think there's a lot of support in the S&P around 5,700. 5,700 to me is like critical support that if we can hold it, we can maintain the integrity of this bull market and see these all-time highs again. But if we break 57, I feel like something is brewing where this thing's not holding like it probably should technically.
I feel like
Chris,
people would out if we hit 57.
You see what?
These two chart patterns scare the crap out of me right here.
What do you got? Can we show Jeff, what do you got? So what were you saying, Alex, on your levels?
I
5,700?
was just saying 57 would freak people out. Oh yeah, can you people not see Jeffrey's share? I don't know how to. I guess I'm sharing. Here you go, Jeffrey. Why don't you take over the big share?
Yeah, let me show you this
You're
right
on
here.
little share.
Are you going to draw? Don't tell me you're
screen.
going to draw like a big rising wedge.
Oh, look at this. Look at these two charts.
All I see is like a big square.
Let's see.
Oh, I see what you're saying. But do you have that like intentionally blocked off where it's like it looks like a bullish head and shoulders?
No, this is, you know what this is right here in the window?
No.
This is 2007, right before we dropped 57%.
Oh, yeah, I get it.
Those two charts look the same to me.
Yeah. But did you see the analog? Did you see the analog on Slack this week for us? The analog that was like comparing 1998, and it's eerily similar. And we also ripped all the way through 1999. Like,
Yeah,
I just don't think. I don't know. Are we that leveraged where it's like I mean, look, the housing market was a bust in 2007, 2008. Look, we have like 70+% of U.S. homeowners are sitting on sub 5% mortgages. Most are sitting on sub 4% mortgages. There's a lot of resiliency in the housing market with just people's net worth. I know it's a lot of it's in real estate. And I know it's dangerous to be like, well, my house is worth this much. And in reality, real estate has never been, or nor should it be, something that you can make hundreds and hundreds of percent on. It's like real estate should be, you pay equity and it maintains it, and you have the mobility to like sell your house and get out your equity and then move elsewhere. But we're in a point now where it's like, if you sold at these highs, you are now going to spend all of that money and all that gain and all that equity into just getting into another house. Like there's very little to gain if you're going to sell now at the highs and also buy at the highs, because we are in the most unaffordable housing market we've ever had. So
you haven't made money until you sell, right? So yeah. So if you even if you have like 200 grand in equity growth, it's like, yeah, you're gonna sell and then you're gonna spend it all, like you said.
Yeah. I don't know.
I'm
I
not,
mean, do
but
you
by
think
no
it's
means I'm
2008 all over
saying
again though? Do you think it's that? I think we melt up before we have that, Jeffrey. I really do.
so it's like we have this kind of weird combination of the late 90s and 2008 at the same time with the commercial
Yeah.
real estate and this AI bubble. There's no doubt it's a bubble. Like they're talking about pouring in, Facebook's talking about pouring in up to $1 trillion in the next couple of years into
Yeah.
building out these facilities. And it's like, okay, this sounds I lived through I learned to trade early in the dot-com bubble, and right up through it. I mean, everything that's happening right now, if you just took .com out of the name and put .ai in the name, it sounds exactly the same. Like it sounds exactly the
But
same. Like
we
all the
don't
stories, all
have
the rhetoric.
but we don't have stocks that are up thousands of percent like we saw in the dot-com bubble.
But we
Like
have AI
it's not.
stocks that are.
Are they up thousands of percent? Like they
Some
didn't
of the
start. I don't know. I don't think it's that. I don't think it's that bad yet. I don't think it's that bad
some of
yet.
the little names, but
Yeah.
we have that debt bubble and we have the
Yeah.
commercial real estate problem, and we have like maybe it's just a perfect storm where it's no one thing that really rips it apart. It's just the perfect storm, and
Yeah.
I'm just cautious. I see
Well,
these
that's
chart patterns show up, and it just makes me nervous until it breaks, until it does something
that's
different.
Sure.
that's the thing too, is anything that I mean, look, maybe it's all priced in, maybe like the speed of communication, which is unprecedented. We haven't had it, before a big market, or maybe it just makes everything happen faster, which we have been talking about, like these cycles happen faster, but or maybe everybody already knows what's going to happen because of the grand, hive mind. But like, look, it's usually the thing that you're not anticipating is what causes the house of cards to start tumbling. So it's like, yeah, I mean, maybe to me, it's like maybe we're talking about housing and maybe we're talking about commercial real estate. Those all seem really uh
I'd say plausible.
anticipated.
Yeah.
Anticipated.
I think that's the wall of worry to me. It's like we think that's what's going to break it, but it's like we keep talking about it, we keep talking about it, we keep talking about it. Doesn't happen, doesn't happen, and it's going to be something we're not even talking about. That is going to be the excuse and the
Yeah,
why
it's like,
and the reason the market latches onto it. And they're like, well, that's why it happens. And it was like nobody was talking about this.
and nobody
I
was
don't know.
talking about Lehman Brothers, and all of a
Yeah.
sudden,
Yeah.
Yeah. Yeah. Z saying currency markets. I feel like people are talking about the yen, again.
The dollar has to break, or I think if the dollar yen trade goes from 140 to 120, then we're talking like big repercussions for the dollar, and like that's a huge safe haven flow if we get something like that.
No. Yeah, pull
We're
that
not
up.
even close to it, but like that, I mean, the dollar yen spiked up to like 148, 149. You can see, I mean, I see a big head and shoulders pattern there, where if we break that neckline at 140, it's a 2,000 pip measure move, man. And I'm gonna short the crap out of that thing down to 120. Yep. Look at you just calling it out. Yeah, that's exactly right. And you can see even what's the orange line you have there, Jeffrey, in that on the chart?
that's called my roadmap line.
That's your
It's a
roadmap line. Okay.
144. It's a 144 EMA.
So if we break that with like close below and confirmation below it, I think that's again like you can start the trade early, but the neckline to me is 140. And yeah, I mean if it's like we can always break and have like a messy neckline, but I think the destination's like 120. You can just measure head and shoulders, neck, and project that move. It's about a 2,000 pip move. So
Now,
but
what's interesting here is a lot of head and shoulders. If they reject, which so far this one's rejecting,
mhm,
that's the move
right.
back to the head.
But then there's no such thing as like a triple top or a triple bottom. Like it could just be a giant range, right? A giant range. And sometimes currencies will absolutely do that. It's just be like range bound for, a while. Our dollar index has been range bound for multiple years. So that's why I'm saying for one, if anybody has known me for the last like 10 plus years of teaching traders and I've traded currencies for a long time, I hate the Japanese yen. I think it is a currency pair that you can make a fortune on, or you will always lose on it. Like
Yeah.
the Japanese yen, I think is the currency equivalent to the Widowmaker. Like if you do something silly and try to like dollar cost average into yen pairs, you will get your butt kicked in the market. I am living
Why do
proof
you
that
think?
I've.
Why do you think that versus like the CHF or something?
Well, because if you look at a yen pair, a lot of times when the yen moves as a basket, it moves with like a technical and fundamental alignment, and it's like 2 to 3 times more aggressive, and it's also more irrational. I like currencies because you have technicals, pivots, pockets, efficiencies, fibs, and when it makes a high, it pulls back, makes a low, pulls back. You get efficiencies. The Japanese yen, when it decides to go somewhere, look at 2022. Look what the Japanese yen did. It went up like 4,000 pips, and it never pulled back. In 2012, it went up like 7,000 pips and never pulled back. Now it pulls back eventually, but no trader over the course of 6 to 12 months is going to be thinking, I'm going to have a 5,000 pip stop loss on this yen pair, right? So I mean, you just have to be responsible on trading the Japanese yen. I know somebody that lost, $3 million in 2008 trading the pound yen, thinking it was going to be a bottom. And the bottom just never came. And it was like, it was a 15,000 pip move in 2008. So it's just one of those pairs where trade what you see. Trade what you see, and like I'm telling you, if it breaks 140 and there's conviction on that trade, 140 to 120 is an easy move, and it comes back to all of the inefficiency that you can see. I'm like pointing at the chart. All the inefficiency you can see at 120. When that market started to rip up, that was at 120. So I think
I already had that drawn, funny enough. Like,
yeah.
Chris is referring to it. I already had it drawn. I just had to zoom out.
Yep. So yeah, so that 140 to 120, you can see it right there, and that would be a nice measured move. It gets us right back to that breakout point that was really inefficient back in 2022. You go left on the chart, go back to 2012. That was when Bank of Japan started to come out of that tsunami and started to weaken the currency. That was like the big carry trade that started. That was 7,000 pips or more on a lot of these currency pairs. Crazy, right?
And just in case anybody's not following, pips are like kind of like penny denominations in U.S. stocks. They call it pips because when you make currency pairs, the dollar is not always involved. So
so percentage of points.
Yeah, it's like pips.
So basically, there's ways to trade it where you can make a pip worth it's like 10 cents, or you can make a pip worth $1 worth $10. So it's a leverage market. Too. Yeah, leverage market. So I mean, for me, realistically, if I could have a trade from 140 to 120, I would probably try to stack up, a standard lot worth of trade size and try to make like, $20,000-$30,000 on that sell trade. I also in the options market, I would trade futures, which is /6J, and just trade the inverse of that, because what we also have in the Japanese yen and currencies is a negative swap. And it's one thing that literally the last couple of years has turned me off to currency trading, because I was long dollar Swiss. I was long, euro. What was it? I was long Aussie yen. I was long euro yen. I was long pound yen back in 2022, but I was also short dollar yen. I was paying like 30 to 50 bucks a day in negative carry. And I was so pissed, because I'm like, okay, but I've got positive swap pairs that aren't covering my costs, and I'm in 3 of them versus 1 of them. It was such a weird thing. And then my Swiss pairs were also not paying me, and I should have had like a 4% swap on that. But it didn't start kicking in until liquidity providers started giving it to brokers, which started giving it to traders. And it was like January 1 of 2023, I started to receive positive swap on my trades.
That's because of the interest rates in Japan? Is that why? Or
So I mean, if you've got the Swiss right now at 0%, which their official cash rate is 0%, the Bank of Japan is at 0.5%. We at the US, the Fed is still at 4.25, 4.5, right? The Eurozone is down into the 3s again. The pound, the Great British Pound of the UK, is down into the low 4s. New Zealand, Australia are in the 3s. It's just an odd environment where we had everybody raising rates in 2022 because the Fed kind of led the way, and now everyone's been cutting rates. Trump has been pretty vocal saying we should have the lowest rates in the world. I'm like, no, we shouldn't. Like, we should never go back to 1%. We should never go back to 0 interest rates. Like, it was never good. And that truly was, if you heard the phrase TINA, which is there is no alternative, that's what forced like no safe haven trading, because like bonds were offering no yield. And I just think you have to take on a lot more risk. And so at least now people can argue like, well, I guess I can just hold a money market instrument for 4.5% and be happy. Maybe that's good enough if you don't want to take risk. You just need to have a solvent bank. If I'm trading a JP Morgan, money market instrument, I'm not really worried about JP Morgan going out of business. I think that 12-month CD is fine. It's just illiquid. But if I can get 4 to 5%, that's pretty risk-free, if you ask me. That's just not my style. I can sell a covered call on something to make 4%, so.
Well, you might as well put it in JAAA, have AAA collateralized bonds. Make 5.8%.
There you go.
Yeah. That's pretty cool.
And that's AAA. I was gonna say, don't get into the crazy high yield stuff. Don't get the
no. This is AAA collateralized. This has collateral and it's AAA rated. There's never been a single AAA rated bond ever default. This is as good as you can get without treasuries, and treasuries that may default too.
I know. That's not a bad one, Jeffrey. Honestly. If truly the integrity is, it's really AAA collateralized. It might say it on paper, but maybe it has subprime in there somewhere.
Lurking So
It's
real
been
quick,
rocking along.
it's 12 o'clock. I want to get one more lightning round. Got some earnings next week. Which ones are you most looking forward to? Specifically, I want you to save Apple for last.
Okay, I'm just gonna go. So Apple, Amazon, Microsoft, Meta, all Mag 7s. I'm gonna look at those primarily next week. I think we can trade those. There might be. So what I'll do is I'll do some searches on that list of earnings you show. I have a scanner that will look for particularly highly sensitive earnings prints. So if I get something that usually is like very price sensitive, then I'll try to price it out. So of that list, I'm probably going to price out 10, 15, 20 different earnings plays, and I'll show that for my newsbreaker service. But Mag 7 is going to be really the kind of the make or break for the market next week. If it holds resilient, it's probably because Mag 7 came in fine. The market might be very slow on Monday, Tuesday because they're all anticipating all the Mag 7s on Wednesday, Thursday. I think a lot of that market cap is like, what's Mag 7 going to show us Wednesday, Thursday? And then, of course, we have non-farm Friday and the August 1st tariff deadline. So I think a lot of it's going to hinge on what Mag 7 does.
This is kind of an interesting week, I think. For me, ones that attract me, Mara and Starbucks and Coinbase and Strategy over there. It's going to be interesting how they're integrating the Bitcoin treasuries into their, how they're actually putting that on their balance sheet. For me, it's not necessarily a big trade. It's just interesting to me. And we'll see if UPS can actually turn itself around here. Logistics
FedEx
right now is really, really beat down. And
but UPS also has a ton of liabilities, like their pension, their liabilities on their employees. There's like it's kind of like a Ford.
And they lost their number one customer, Amazon.
Yeah, which is crazy. I know.
Dude, they kind of built their own death sort of with Amazon. Because then they signed like a great deal at the beginning of Amazon, like 1999. I know they signed some special sweetheart deal with UPS. UPS is like, oh hell yeah, we'll just extract from this niche little.
But they should have UPS should have looked at the writing on the wall and tried to keep that relationship going at least in more meaningful way, or be a part of their logistics system instead of just getting obliterated when they just say, hey, they're like, hey, guess what? We built all our fulfillment centers and our own trucking, and we bought our own airline, and see ya.
Yep. That's tough. Yeah, and I mean FedEx has been a better play versus UPS, but I think
FedEx right now is really interesting too, because they just combined their ground service and their standard express service together. I don't know if you knew that, they just consolidated all those warehouses together. It's been absolute chaos getting something delivered, but it's interesting eliminating their dual management of those two logistics systems, and they're trying to put it back together.
That's pretty dope.
So, check some price. FedEx.
I do like the UPS franchise model for the stores. I always feel like UPS stores are pretty nice.
They're way better than FedEx. Experience-wise, UPS stores are way better than FedEx. I go to the UPS store quite a bit, like little prints, little copies, sending packages, Amazon returns. Like, there's some benefits, but yeah, their FedEx is at least way more resilient than UPS as far as the stock price goes. Wow, UPS is so bad. They're back down to COVID lows, man. I mean, that doesn't look terrible, but let me check the fundamentals and make sure there's some upside to it.
Didn't the FedEx founder just die a couple months ago?
That I don't know. I mean,
you ever hear that story of the FedEx guy, man? That was a pretty crazy story. He had like $2,000. Was from when he was starting the company, and he was running out of cash, running out of runway. He went to Vegas and gambled it all on blackjack, and he turned like $2,000 into $27,000 or something, and used that to fund the next phase of FedEx.
That's crazy.
Yeah. So long Fed, I don't think UPS has such a cool story.
I mean, FedEx, if you look at honestly, the only thing that attracts me about UPS is the mechanics of the options play, because we've had the stock beat up so badly. Fair value and discounted cash flows around 167. We're trading at 61% off those all-time highs.
It's at a technical level that can.
I know, it's like we're back at COVID lows. Man, it's like I'm gonna look. It's just a trade, maybe an income trade. Maybe I'll probably do a ratio spread, but I'm gonna dump. So we have earnings on the 29th. Let's look at the expected move. I go to, let's see, 29th of July. We go to the 15th. I mean, expected move is only pushing us down maybe into the 90s. Pretty good support around 82. It's like if I do a ratio spread at 80 something, that's not too bad. I'm going to go out to like December, January, see if I can get enough time in the trade to make it worth my while.
And the
January.
existing low in April was 89.20, so
Yeah.
89.24.
So I can do an 85 by 80 ratio spread for $90, which isn't a bad trade. I mean, there's a 92% chance of profit on the trade. It's a little income trade. If I own the shares, I'd own it around like $74. I think I could repair it, but I don't get too excited about the premiums because if I went out 29 days,
if you want to share your screen, show it like show
yeah,
it.
sure. I'm just doing the quick math in my head here. So if I do a January expiration, so I go out just outside the expected move, which going out to January based on this current option, like Ivy rank is decent, it's at 34.6. But if I buy the 85 put with one contract and then sell the 80 with two, that's a ratio spread. I can get $85. Now that's not what I get excited about. It's an income trade. I can do this on 15 accounts and make like $1,000 or whatever. But if I have prices steadily falling, and we got some pretty good support at like $89, $88. The chance of assignment, it's like price has to come all the way down to 80. So I could go up here. Now I get $1.15, but I have more assignment risk. If I go down here, probability of profit's 91%. If I own the shares with a $5 ratio spread, I actually own the shares around $74, which the chance of me really get into a lot of risk on the trade, that's like a 6 or 7% chance that I have to take on any real risk.
That
So
was 76.
Say that again. What? My
You
break
said
even?
that, yeah, it said it's
My
76.
break even would be like 70. It'd be like $74.60 or 40
That's
cents.
so
That would basically be the COVID low.
Yeah,
Yeah,
like it's
that's
really,
so
really
far
low.
below
So,
anything.
honestly, I like this trade, but I don't really like it for 74 cents. If this was trading for like $1.25 or $1.50, and I could put this on, 15 accounts, I'll make $2,000 or $3,000 with it. I'd be happier versus I make $1,000. Like it's okay, but I don't know. I need more premium. That's kind of my thought is I need more premium. I'm just not getting it, unfortunately.
Hey, if we get a market pullback, it might be juiced up.
Maybe that's true. And so I'll put this one on the radar. Yeah, let me put this on the radar. So we're at 103. Let's pull back into the 80s. Yeah, I like this trade. Let me just put a chart on like 90 because we have earnings next week as well. So maybe this drops down into some fresh lows. If we get to 90 and I could look at like the 85 by 80, I might take that trade that gets me below COVID lows. Look, I've made a lot of money buying off COVID lows. I've had some that like Pfizer has not worked out since COVID lows. But most of the time, if you're buying things off COVID lows, it works out pretty well. So that's not a bad like major low in the market. So if I can craft my trade in such a way where I could have potential assignment below COVID lows, I'd be okay with that. But also kind of just be mindful of the risk. So I'm going to put a pin in that one. I want higher premium, so maybe the best trade to take on this one is if I did an 85 by 80. Okay, which right now the 85 by 80 gets me about $86 of income. There's about a 92% chance of profit. That's not a bad trade. But if this jumps up to like $1.25, I'll probably take the trade.
Yeah, just put your limit order in there, baby.
I might, man. I might. But if I'm going to do it, I might as well put it at like $2 because if we drop $10, I mean, we can probably see this value.
Yeah, get your IV spike and really get the juice in there.
Let me see. I'm going to do a 250 here. I'm going to do a 250. I'll test the waters here with a 250 credit. So this is going to be pending, but 85 by 80, 250 credit. I'm not going to get filled unless price drops, but let's see what happens.
We will let you know, folks, as this.
I'll put that one out there for a feeler, little feeler on EPS. But it's not filled. So, I mean, I'm just going to let that one pend and see what happens through earnings. I saw this yesterday, for example. I did like a kind of a fancy trade on Tesla through earnings that was like selling two puts at like 280 and 275. I tried to put like a $5 credit and it only went up to like 350. So I didn't get enough. Even though Tesla dropped $20, I only got the credit to jump up like a couple of dollars. So sometimes it just doesn't fill me where I want, which is fine. That's like classic Buffett. It's like sell your puts, and if you get filled, it's at a price you are saying you want to own it. So, I mean, if I'm going to
put it in the sweetheart price, and sometimes you get it.
Sometimes you get it, and then sometimes you get it. I'm like, oh crap, I don't want it now. If it has like a $30 gap, I'm like, oh, now what have I done? No, we'll see. We'll see.
No buyer regrets. No buyer regrets.
No, there's risk in the trade. You got to know that.
So yeah, I mean, UPS coming up again. We got Apple. We got Apple next week.
Yep. Grab the screen, Alex.
As well. Look, I trade Apple every week, basically. I'm going to tell you about how I do that. But we do. I mean, we have a pretty good jump over. We did. I think I sent this out. to folks in my Telegram. We did get a nice little 20% on this break over the consolidation zone, but we are over this near-term resistance line of 213.82. Again, earnings next Thursday after market. So
Yeah.
we will see. To be honest, this was just a technical play. I'm not bullish Apple at all. I mean, you can see here, I'm with Lance, the other Lance, my new Lance, not the one we all know and love. Lance Roberts here, a
Yeah.
financial strategist, has sold his Apple shares, worried about the company's AI development, tariff risk, particularly from China. Apple's not a good. I really
Well,
don't think.
Lance is bearish too, and I am too.
Okay,
Are
so
you guys like, are you seriously like bearish Apple, or just like it's
Ah,
not going up?
I'm
I
seeing
think we're
one.
going to a new low. New
I think
low.
Wow.
at least 170 for me.
Yeah.
Okay.
Back to the low.
Yeah, it's just there's no what is Apple's when you have Nvidia, when you have like AVGO, like you don't even have to worry about the Mag 7 AVGO. Like you got all these companies, you have Meta, you have Amazon who is in a much better trend. I mean, we can look at Amazon, a much better trend, tons of stuff with robotics. They're still off all-time highs. Why would you buy Apple versus Amazon? What's the growth case for Amazon? It's lots of them. What's the
Sure.
growth case for Apple? There's like hardly. I mean, they're so
Heck,
behind.
Amazon's built their own satellite manufacturing facility to roll out Starlink competitor satellites.
Yeah,
I
that's
mean,
insane. That's insane.
I mean, Amazon Bezos is like I think he's taken a lot of places out of like the playbook of Elon Musk. He's making
he's just
vehicles. He's making trips to Mars. He's in the private
it's almost
venture,
like
like
mini
private.
me.
It kind of is. It's
Yeah.
like when you talk about it,
Yeah.
it's like you're going to compete with Starlink. It's like, okay, so Musk has these things. It's like, I'll just do that. I'll make a competitor with that. I mean, it's good for business, I guess, good for supply and demand, but it's just funny where I'm like, he's just getting in the same spaces that Elon Musk is already in.
Yeah.
Well, there's lots of room in those spaces. I
That's
mean,
true. That's true. Yeah, for sure.
Yeah. Lots of room and space
Yep.
for many, many billionaires.
Yeah, exactly.
But yeah, so folks, like, look, I think Apple, I wouldn't be like what are my earnings expectations? They're probably going to beat all the big tech companies are pretty much beating. It's, whatever. It doesn't really matter.
Apple sandbags. Apple sandbags. They come in low with their, they convince their analysts everything, and it's the classic Apple play. They always sandbag. They always convince the analysts they're doing bad, and then they beat. And that's just so for Apple to miss is like super rare.
Yeah, I mean, it's last time was early 2020 or late 2023. Yeah, so look, but the thing is, they're opening up they don't have AI, right? They don't have any new hardware. They're opening up their ecosystem, which has been the Apple thing, their
Yeah,
own
a
ecosystem.
closed loop. Yeah.
They're opening it up to third parties to try and capture to Microsoft with OpenAI and stuff, right? Which is crazy. Like Steve Jobs is rolling in his grave, or I think in his urn. I think he was cremated. But it's like this is not Apple's not going anywhere. I'm not saying, they're gonna be like pets.com, but they're not gonna be the leader. I wouldn't be surprised in another.
But they don't have to be either, guys. Like Apple has enough cash. They don't have to be the
Oh
leader
yeah,
in anything.
yeah.
They can just do something the Apple way and probably make it better. Like if Apple want to
And
make a car, people probably still buy the car.
They
I
tried
just
that
think
though.
there.
They
I
tried
think
that.
there's
It
like.
failed. That's what I'm saying.
Yeah.
I think there's like this period of just like lacklusterness until they find a new way. Um,
Right.
They
like
got to
some
fire.
some
They
new
got to fire
thing
Tim
that
Cook.
some new thing that gets everybody excited.
Yeah, they got to
Yeah, I
fire
don't know what that is. They have to what? Fire Tim Cook?
Tim Cook. He's an operator. I don't think he's the guy though to take them to that new thing.
Yeah.
And you need a new visionary, and that could really spark off Apple.
Yeah,
Sure.
of course. It's hard
Put who's Nvidia's CEO?
Jensen.
Jensen.
Jensen, yeah.
Make him just leave Nvidia and go to Apple.
No, just dual CEO, right?
There you go. They'll merge. It's like we're 4 trillion, you're 3 trillion. Let's make one power company.
Yeah,
The government
eventually,
would probably love that.
right. So when Nvidia has to like juice its earnings again, they'll just steadily announce merging with all the other tech companies, and that's how they're gonna keep. That's how this whole thing is gonna just keep on going up forever, man.
Yeah, maybe the ticker mags is just going to be $20 trillion.
Yeah. Mega Mag. I like that.
Mega mag. Yep, there you
Mega
go.
Mag. That's the new trend, folks. You heard it here first. Mega Mag is going to be building pet robot dogs. That's right. That's right, Craig. So, anyways, all that being said, so doesn't matter what I really think about Apple, because I still trade it every week. You know, get some nice premium income from it. And I'm going to show you guys how to do that. So it doesn't really matter like what, you know, Apple's going to do, what happens after earnings, what happens, you know, this week. We just closed out it was a 60% winner earlier this morning, the return on risk this morning on Apple, just doing this strategy. So look, forget the noise, right? Whatever's happening is going to happen. But Apple, like we said, it's not going anywhere. Still got a ton of cash. Still makes it a really, really good strategy if you do want to target some nice weekly income. So I'm going to go ahead and show you all how we do that. And a little bit, you know, this strategy, been doing it for 2 years. It's been really, really good. And the best part is it's summer, right, folks? So if you do want to take a vacation, you know, you don't want to have to tune in to listen to us talk for an hour and a half, right? Even though I enjoy it, and I think you do too. But you can still do this strategy while you're on, you know, on the beach. You can still do it while you're at the water park or wherever you are, Europe, on a cruise, whatever, right? Because it's a very mechanical, very you know, repetitive strategy in a good way. And I'm going to show you how it all works. Okay.